Welcome to the Deep Dive. Today, we're going deep on ONGC. That's Oil and Natural Gas Corporation Limited. You send us a ton of data, like stock history, financials, all that. Looks like you really want to know if ONGC is a good investment.
It sure seems that way. Yeah, we've got quarterly reports, balance sheets, cash flow statements, even those shareholding patterns. Looks like we're in for a real deep dive.
Okay, so let's break this down. You want the numbers right. So the most recent report, the one ending September 30, 2024, well, it shows ONGC is making a profit, a net profit of about 11,984.02 crore. But I got to ask, what really stood out to you when you looked at all this stuff?
Well, what's really interesting is how the revenue breaks down. You see ONGC's offshore operations, they're bringing in way more than their onshore work. So the question is, why is that? Is it because they're finding better crude offshore? Or maybe the prices are better out there? Or could it be some kind of government incentive? Now, that's definitely something worth looking into.
Yeah, for sure. But before we go there, I'm looking at this debt equity ratio, and it's super low, like around zero point zero 0.02. So for those of us who aren't, financial experts, what's that actually telling us?
Well, it's a really good sign, that debt equity ratio. It basically tells you how much debt a company is using to pay for its stuff, compared to how much is coming from, the shareholders. A low ratio like RNGC's, it means they're not borrowing a lot of money, which gives them more options, and it also means they're less affected by interest rate changes. And that's always good news for people who are thinking about investing.
Got it. But hold on a sec. Things get a little interesting with ONGC Videsh. That their international branch. They've got a stake in this Sakhalin-1 project. It's in Russia. And from what I've read, all the global politics has made things, well, a bit messy.
Oh, absolutely. The Sakhalin-1 thing, it's a tricky one. All those sanctions, the ownership changes, it's made it hard for ONGC to figure out what their investment is actually worth. See, at first they were using this proportional accounting method, but with all this uncertainty, they had to switch gears. They're now using a fair value assessment. Basically, they're trying to figure out what their part of the project would sell for right now.
So they're trying to put a price tag on something that's kind of constantly shifting because of, well, world events. How did changing how they do the accounting affect ONGC's, I guess, bottom line?
Well, it actually made it look like ONGC made a lot of money, at least on paper. But it's important to remember that this is based on a pretty complex valuation, and nobody really knows what's going to happen with Sakhalin-1 in the future.
So good news on the balance sheet, maybe, but with some, big question marks hanging over it. Speaking of question marks, what's the story with all these tax problems I keep seeing? Something about a dispute over service tax and GST on royalty payments. Sounds like a real pain.
Yeah, it really shows you how complicated India's tax system can be. ONGC has had to set aside a huge chunk of money, over 15,943 crore, just in case they lose this dispute. And that's a big deal, even for a company as large as ONGC.
Whoa, wait. Over 15,000 crore. That's got to be a red flag for anyone thinking about investing. So where do things stand right now? Any decisions from the courts?
Well, there have been some developments. The Chennai Tribunal, they ruled in ONGC's favor. They said that service tax on those royalties, it doesn't apply. But hold on, the story's not over yet. Under the GST rules, this whole thing is still being fought in different courts. It's really up in the air. So those ongoing legal battles and what they could mean financially, those are definitely things investors need to keep in mind.
Okay, so we've got uncertainty in Russia and tax troubles here at home. Not exactly smooth sailing. But hey, before we get lost in all that legal stuff, let's switch gears for a minute. Let's talk about what ONGC did with the ONGC Petro Additions Limited, OPAL for short. They just bought up a bunch more shares. Now they own over 90%. It's officially a subsidiary. What does that mean exactly?
Well, Opal is all about downstream operations. Basically, they handle processing and refining that crude oil and natural gas. By taking control of Opal, ONGC is taking charge of more of its supply chain, from, pulling it out of the ground to actually refining it. This could lead to some interesting synergies and maybe even save them some money in the long run.
So they're streamlining their operations, which sounds good for investors. But how does buying Opal actually affect ONGC's financials? Can we see that in these reports?
Since Opal's a subsidiary now, its numbers are going to be included in ONGC's statements. So we'll need to take a close look at those combined statements to really get how this acquisition is impacting ONGC's overall performance.
Sounds like we've got some more digging to do. We've covered a lot, but I want to get into these financial statements even more, especially those cash flow statements. Those can be a little intimidating,
Don't worry, I'll walk you through it. We'll break down those numbers and see what they tell us about ONGC's financial health.
All right, let's grab our calculators and get to work.
All right, so let's dig into this balance sheet. Okay, think of it like a snapshot. of ONGC's finances. At a specific moment, it shows what they own, their assets, what they owe, liabilities, and that all-important equity, which is basically the difference between the two.
Okay, so it's like a financial selfie. What's ONGC's selfie telling us?
Well, the first thing that jumps out, the sheer size of their assets. I mean, we're talking hundreds of thousands of crores. And as you'd expect with a big player in energy, most of that is tied up in their main operations. Oil and gas fields, refineries, pipelines, all the infrastructure they need to make it all happen.
Right, right. That's their bread and butter. But what about the flip side? The liabilities. We know ONGC doesn't have a lot of debt, which is good. But are there other things they owe that we should be looking at?
Oh, yeah, definitely. It's important to look beyond just debt. There are things like lease obligations, those provisions for the tax disputes we talked about, and then there's something called deferred tax liabilities.
Deferred tax liabilities. That sounds kind of complicated.
It is a bit technical. Basically, it's the difference between the taxes ONGC's already paid and the taxes they're expected to pay in the future, based on the current tax laws. The key thing to remember is that it's still a liability. It's got to be factored into their overall financial picture.
Okay, I'll trust you on that one. So let's move on to equity on the balance sheet. What's that telling us?
Equity. That represents the owner's stake in the company. A healthy equity position, like ONGC has, usually means they've got a strong financial foundation. A lot of ONGC's equity comes from what are called retained earnings. It means they've kept some of their profits over the years and reinvested them back into the business. That's usually a good sign, shows they're focused on long-term growth and stability.
All right, so the balance sheet's looking pretty good so far. Now, let's tackle the cash flow statement. I know it's important, but it can also be a bit confusing. Where do we even start?
Well, think of the cash flow statement like a movie. It shows you how cash is moving in and out of the company over a certain period of time. And it's all neatly divided into three main parts: operating activities, investing activities, and financing activities.
Okay, let's break those down, starting with operating activities. I guess that's where we see their core business in action, right?
Exactly. For ONGC, that means everything from searching for oil and gas to pulling it out of the ground, refining it, and finally selling it. The cash flow from operating activities section of the statement shows us how much cash ONGC is actually making from all that core business stuff.
So is ONGC actually making money from their main business, or are they, losing cash?
Good news, they're generating positive cash flow from operations, and that's a really important number for investors. It means ONGC isn't just profitable on paper, they're actually bringing in cash from doing what they do best, and that cash flow. That's what lets them invest in new projects, pay dividends to shareholders, and even buy back some of their own stock.
Got it. That's a big plus for ONGC. Now, what about investing activities? What falls under that?
Investing activities. That's all about the cash going in and out for ONGC's long-term investments. Things like buying new oil and gas fields, upgrading their refineries, or even making strategic acquisitions like that Opal deal they just did. All of that stuff would show up in this section.
So when we see those big investments, like that Opal acquisition, those are going to show up on the cash flow statement. Is that something investors should be worried about?
Well, it's important to understand that cash flow from investing activities is often negative, especially for companies that are growing and expanding. That's because they're spending more cash on investments than they're getting back from selling off old assets. So a negative number there isn't necessarily bad. It really depends on what they're investing in and whether those investments fit with ONGC's long-term strategy.
Okay, that makes sense. It's kind of like, when you're renovating your kitchen. You got to spend money to make money.
Yeah.
So let's talk about the last category, financing activities. This is where it gets a little Wall Street-y, right?
It does have a bit of a financial flavor. This section is all about how ONGC is raising and managing its money. Things like issuing debt, paying off debt, offering stock, paying dividends to shareholders, even buying back their own shares.
So it's all about how they're using different financial tools to, keep things running smoothly. And speaking of running smoothly, you mentioned shareholding patterns earlier. Why is it important for investors to know who owns ONGC?
Well, the shareholding pattern gives you a peek into who's got a stake in the company. It can give you an idea of stability, see if there are any potential conflicts of interest, even give you some clues about where ONGC might be headed in the future.
So who are the main players here? Who owns ONGC?
ONGC's got a pretty diverse group of shareholders, but a big chunk is owned by the Indian government. That makes it what's called a public sector undertaking, or PSU. which can have its pluses and minuses. For example, the government's stake provides a certain level of, stability and support, but it also means ONGC's decisions might be influenced by government policies. We also see a lot of ownership by institutional investors, mutual funds, insurance companies, pension funds.
And what does that tell us about how confident investors are in ONGC?
Well, usually when you see a lot of those institutional investors, it's a good sign. They're pretty sophisticated. They've got whole teams of analysts who really dig into companies before they decide to invest. So the fact that they've got big stakes in ONGC shows they're pretty confident about the company's future.
Okay, so we've got a company with a lot of assets, not much debt, a history of making money, and a bunch of different shareholders, including some big-time investors. Sounds pretty positive. But we can't forget those potential problems we talked about earlier. That tax dispute, the uncertainty around Sakhalin 1. How should investors weigh all that?
Those are the million-dollar questions. And honestly, there's no easy answer. Investing in ONGC, like any investment, means carefully thinking about the potential rewards and the risks involved.
So let's talk about those rewards and risks. What are the key things investors need to consider when they're making their decision?
Let's start with the good stuff. ONGC, they've been profitable for a long time, and they're a big deal in the Indian energy market. They've got a lot of assets. And remember, those low debt levels we talked about, that gives them a lot of room to, handle challenges and go after new opportunities for growth.
So they've got a good, solid base. But how should investors think about those risks? The tax dispute and all that uncertainty around Sakhalin 1, those seem like pretty big unknowns.
It really comes down to how much risk you're comfortable with, that tax dispute. It's definitely something to think about. ONGC seems to think they'll win in the end, but nobody knows for sure. If they lose, it could really affect how much money they make. And then there's Sakhalin 1. That's even harder to predict. Global politics can change everything. The future of that project is, it's foggy.
Right, so there's potential for things to go really well or really badly. What else should investors be considering?
Well, think about ONGC's growth, that Opal deal. It shows they want to do more with their downstream operations. So what do you think about that? Do you think their strategy is going to work? Are there other things out there that could help them grow? Those are all things worth thinking about.
What about their dividends? I mean, ONGC is known for paying dividends, right?
Yeah.
That's got to be good for investors.
It can be. Getting those regular dividend payments, definitely appealing, especially if you're looking for income. But you got to look beyond just the dividend itself. You got to consider the dividend yield, which is basically the annual dividend payment as a percentage of the stock price.
Right. A high dividend yield. It could mean the stock's a bargain, like it's undervalued. Or it could mean the market's worried about the company's future, and that's why the price is down.
Exactly. You got to look at the bigger picture. And remember, what happened in the past, it doesn't guarantee what's going to happen in the future. The energy industry, it goes up and down. And there are a lot of things happening globally that ONGC can't control.
So no crystal ball to tell us what's going to happen. Sounds like investing in ONGC is, it's a bit of a gamble. There's potential for good returns, but there are also some pretty big risks to think about.
Yeah, that's a good way to put it. Do your research. Think carefully about what you want to achieve with your investments and how much risk you're okay with. Those are the most important things before you make any decisions.
Great advice. We've covered a lot today. Quarterly reports, balance sheets, cash flow statements, shareholding patterns, even global politics. It's been quite a deep dive.
It really has. But this is just the start. The great thing about investing, there's always more to learn. Keep doing your research. Look at things from different angles. And in the end, make a smart decision, one that fits with your goals.
Well said. Thanks for joining us on the deep dive. We'll see you next time.